Howdy, Jacob here. Today we're going to do a more in-depth analysis on Sinclair. We ended up getting to an initial price point that looked like it was a screaming deal. So I'm going to remind everyone of the financials and then get into some notes. But before I do that, just a disclaimer that everything I say will be of my opinion. Please do your own research. This is meant to be reviewed in conjunction with your own research and make your own opinions on anything. If you disagree with me or agree with me, great. So, reminder of the financials, we see that they have just under a billion market cap and almost a $4.5 billion enterprise value. So, a huge amount of debt here in relation to their market cap. As for revenue, they've grown very quickly from 1.3 to 3.9. However, there was a huge decline from 2021 to 2022 of 36%. Can't really look at return on invested capital because it's really all over the place. On a 10-year average, we're probably looking at mid-single digits, though. Their dividend payout of about $70 million is 6.3% dividend yield, so that's pretty great for them. Their other uses of cash flow are a little bit from acquisitions, a little bit of reinvestment, a little bit of stock repurchases, and then more recently paying down a little bit of debt. So that's good that they're starting to figure out that debt situation. Their long-term debt is about $4 billion, and their 5-year average free cash flow is actually about $700 million. That includes as high as 1.4 billion and as low as about 247 million. And so the rolling 12 about 380 million. We're looking at 10 times the rolling 12, but on a 5-year average basis of that 700 million, it is just over just under 6, I should say, times. And so not terribly concerning from the perspective of 5-year average free cash flow, but the business is very different than what it was in 2020. And so we'll look at kind of why that is and go over some of the notes that I took from the quarterly reports and the most recent 10Qs and 10Ks that I looked at. So the first thing I want to note is that they've paid a consistent quarterly dividend since Q4 of 2010. I noticed that pre-Great Recession of 2008, they were also paying a dividend, but they suspended it for about 2 years. But ever since Q4 of 2010, every single quarter they've paid a dividend. So that's good for the dividend portion of the yield that we're looking at. 10.5% insider ownership. That's pretty great to see. And one of the notes that goes along with that is there are a handful of employees on the high level who are in some way, or there's a handful of employees who are in some way a child to a business leader at Sinclair. So this could be, I was looking, they have like a whole employee section in their 10Q of children of leadership positions. And that is another positive thing, meaning that there's just a lot of insider ownership. And so the hope whenever you own a company is that management does what's best for the shareholder. And with them having 10.5% of outstanding shares, as well as children who are involved in the business, you would hope that management would make the best decisions for their shareholders and the business as a whole. So that's a positive note. The CEO seems to care about EBITDA, repurchasing debt, focusing on value of assets within each business, and repurchasing stocks. We're purchasing shares from their most recent earnings reports. So I just looked at, again, the most recent earnings reports going back a year or two and just picked out some of the things they're looking at. And so they're not very specific. I really like when companies are specific with what they're looking at, and I really like when they talk about free cash flow, which they did not do. They were pretty vague about repurchasing debt. They didn't say how much they wanted to bring debt down to or the level that they wanted to bring it down to. So that vagueness is also not something that is a positive. But I will say, if we look at their share repurchases that I just pulled in over here, there was a huge amount of repurchases in 2023, Q1 and Q2, and the shares were down from the last 3 years. But in Q3, when they were again mid to low double digits, there was no repurchases. And when you look at the share of Sinclair the last year, you really want to see them in their Q4 report, which is obviously your September to December data. It got as low as $9.73. And so if Sinclair is truly good at capital allocation, if they're buying at high teens, high double digits, then you would want them to be buying when it's high single digits, because if they thought they would get an excess return high double digits, high single digits, you should get a crazy much higher return. And so to me, if they again do not repurchase shares in Q4, that shows to me that they might be using capital allocation a bit poorly, which would just wouldn't necessarily turn me off of the business, because again, everything's still present value of earnings and cash flow, but that I would just have to tweak my assumptions on share repurchases based on that next quarter result. And so again, we hopefully see in their Q1 or their 2023 Q4 report that they repurchase shares, since they were repurchasing a bunch beforehand. Why would they not repurchase it when it's half the cost when they were repurchasing it? So they settled. There was a big litigation that's going to cost roughly 250 to 325 million after net of cost and everything. The date of the payment was not said in the report that I looked at. It was just a one-off release, and so they will hopefully also have that in the 23 Q4 10. I say 10Q, but it'll be 10K because it'll be for the whole year. And so again, that's another thing to look for to make sure that you can see, are they paying this with cash or are they issuing more debt to fund the litigation? And in 2023 year to date, we see revenue down 22% versus 2022. And the reason is due to three main categories of revenue: local media, tennis, and other. Other in 2022 used to include the Diamond Sports, which is part of their litigation, which is the reason for their litigation. And so part of their business is went under. And so if you look at a per business basis, the local media declined 8%. Tennis actually increased 4%, but is a very small amount of the total revenue. And then this other that was inclusive of the Diamond Sports in 2022, but not in 23, is down 91%. But again, that's just because it's not there anymore. And so the largest portion of revenue comes from their local media, and that was still down 8%. So that's pretty tough to see still, but not as bad as the 22% on all of revenue. Their cash and equivalents declined 241 million, and that use of payment, the use of their cash flow and operations and such, and also their cash equivalent on their balance sheet is 76 million decline in debt, 153 million in stock repurchases, and 50 million in debt payments. So that's just for what we're seeing here. This debt payment should have been dividend payment. Oops. So we see 76 million decrease in debt, 153 million stock repurchases, and then 50 million dividend payment. That's their use of cash equivalents as well as cash from operations. They have 547 million in their share repurchase authorization outstanding, which is pretty substantial in relation to their market cap of $1 billion. And so if they wanted to, they could cut the shares outstanding in half or even more, which is pretty crazy to see. And then this is just their debt situation: 1.1 billion due in 2026, 200 million in 2027, $500 million in 28 and 29, and then 714 million in 2030. And then I noticed that this only added up to 3 billion, and so there is $1 billion that was not reported, or at least I couldn't find in their 10Q. So please let me know if you know when that portion is due. But there is 1.1 billion due by 2026, which is not too far away. And so to me, the company with its new assumptions, I brought down their revenue growth assumptions, and then their PE and price free cash flow is based on historical. From what I see on macro trends, their historical PE and price free cash flow. And then that gets me to a new price that needs to fall quite a bit before purchasing. And so the debt is just kind of alarming to me, but hope everyone learns something.